What's going on, guys? In this video, we're going to go over a little strategy, a little bit different than a lot of things I talk about on YouTube, but it's definitely something that I pay attention to. It's something that helps me kind of guide my scalps for the day, and that's a previous day high and low trading strategy. Now, with this type of strategy, what it's going to give you is some days it will give you levels where you can take, whether it's long or short, depending on if we have room in the chart to continue with that trend, or it's going to give you a little bit of directional bias for the smaller time frames for that particular day. So what we've got looking at here is the NASDAQ 100. I've already got the high and the low marked out from yesterday. And if we kind of look at what's going on today, we never took out the high or we never took out the low. Okay, so one thing that should automatically be telling you, inside bar day, okay? Range day, a little bit more choppy. What do we need to do once we've identified that, hey, you know what, after the first 30 minutes, an hour, 2 hours, we're failing to take out a previous day high or low? We've got to do one thing first. That's obviously cut our position size down in half or even less than that, because we don't want to be involved in a range bound day with max size. Okay. I'm also going to say that not every day is a day where you're going to have millions of opportunities to make money. Not every day is a tradable day. Is there setups every day? Absolutely. But not every day is the same. Each day is unique. Each day we need to make those adjustments, and what we need to get good at as a trader is identifying when it's prime real estate, right? When it's prime time to buy and sell, and when maybe it's not. So when it's not is an inside day, is a range day, is when we're failing to take out a previous day high or low, because that's telling you that the market is either A, starting to consolidate, the market doesn't have a lot of volume. It's giving you indicators and clues. But the thing is that a lot of traders will look at their small time frames, 1 minute, 2 minute, 3 minute, 5 minute time frames, and they'll see these little micro setups. They'll take a trade, it doesn't really work out, it doesn't push as far as it did the prior day, and then they start to wonder what the hell's going on. So they start to get out of pocket, meaning they start taking trades that are going against their strategy, they start to overtrade, when realistically what you're doing is forcing movement on a day where there's just simply not that much movement. Okay, so some of your best setups, some of your best days, your best trends are going to be when we confirm a previous day high or low. Because think about it from a top-down analysis, kind of perspective, from a macro overview. Okay, a stock or an index or whatever it is that you're trading, it can't move higher unless it takes out a previous day high. It can't sure as hell go lower if it doesn't take out the previous day low. So if we're trading in between, what is that telling us, right? We're not really moving higher or lower. So what we need to do is cut our position size in half or even more. We also need to lower our price target. So if you have a strategy that's telling you, I'll just use one of my price targets is, let's say we're looking for half the ATR or one ATR, right, on a 5-minute time frame. Well, maybe we cut that even down farther, right? If the ATR is 25, maybe we're looking for 10 points, right? If you're looking for 10 points normally, maybe we go down to 5. If you're looking for 5 points normally, maybe we cut that to 3.5, right? Why, you might be thinking? Well, because why would I want to continue to do the same thing that I normally do every day if the price action is showing me that we're not doing the same thing we do every single day, or even what we do on the best trading days? So again, how I like to use this high and low is if we do break a previous day high or low, I normally like that to happen within the first 30 minutes to 1 hour. Once we break that previous high or low, what I'm then going to look for is a following candle. So for example, if we break a previous day high or low within the first 30 minutes, after the first 30 minutes have settled on the second hour candle of the day, I'm going to look for that confirmation of that new high price. That becomes my entry. Okay. Now, if we don't, like on today's, for example, today's price action, we never took out the high and low. You can see here just marked out, right? Our price action going back to yesterday's high. Let me move this down a little bit. Our price action going back down to yesterday's high was here. Okay, so today is Friday. We're coming into the weekend here. We have not even come close to taking out the prior day high, that 20,025, right? So this spike, this big push off the open, well, you can clearly see that my previous day high is here, right? So if this spike doesn't consolidate up here and doesn't push through the previous day high, what is that telling you? Inside bar day, yes, but maybe it's telling you that we should look for a rejection somewhere in this zone. We should look for a 20 play. We should look for a pullback, double bottom type of situation, look for a false dead cat bounce, double top rejection here. We could have easily taken a short. Once we put in this high here, failed to confirm, we quickly wicked above this prior little swing high and then came down. Maybe we could play some type of zone, right? Start playing a zone in the top zone here. Again, you're not going to pinpoint the perfect entry, but put on position size that you're going to be able to go through a little bit of chop, and then maybe look for a price target where, not saying through previous day low, but maybe towards the current low of day, right? If the current low of day is here. So we got to get really good at starting to read price action, right? So once you're reading this price action, you already have a couple of things starting to play out. Well, we put in a little bit of a spike off the open, but we failed to take out previous day high. Guess what? We got rejected off the dead cat bounce and came back down to bottom test or double bottom, whatever you want to call it, the day low. And we also never confirmed previous day low. Right? So what is that telling you? Maybe the closer we get into some type of technical support, maybe we can play a bounce, right? So if this was current low of day, I want to show you something. If this was the low of day, we put in a bounce, we came back down, almost tagged it, tried to bounce again, we broke that level, right? You see the break of this level? Maybe we've got a zone down here where buyers are a little bit comfortable stepping in, right? We can use these 2 wicks. We can use the prior low of day as a little bit of a zone. We can tell ourselves that this is a cheap long, right? How do we know that? Well, we don't. We don't know that this is going to bounce a little bit, but it's a cheap long because it's a double bottom. Our previous low of day is here. If this does bounce 1 or 2 candles and then fails and then comes back down through the low of day, the new low of day, well, guess what? We get out. We get out of the trade. And then we look for that push into the prior low of day if that was to happen. So that's how you can use the prior low of day, high of day to kind of fit your mold. Now, some of the best trading days that you're going to have is going to be when we confirm that previous day high or low. Okay, those are going to be some of your best days. When you don't really confirm the prior day high or low, that's telling you you're going to have some weird price action. And typically, I like to tell people, stay as far away from trading as possible. I'm not saying don't trade, but I'm saying maybe look for 1 or 2 strategies or 1 or 2 entries based on your strategy. And then if you don't really get it and you don't get that profit, just come back tomorrow because you're going to get a better opportunity. The longer we trade inside, right, the prior day high or low, the better, because that's normally telling you we're going to have a big move coming out to the top side or to the downside, and we just need to be patient enough to wait for that bigger move, because it's the bigger moves that we really want to be involved in, because that's what's going to really make up your P&L for the month. It's not these type of days where you're looking to scalp half size and cut your price targets down. Yeah, these are just called cash flow days. Get in, see some green, take some green, and move it along. With that being said, if you guys want to trade with me each and every single day live, that link is down in the description box below. Also, guys, right now, Apex Trader Funding is running a sale. 80% off, nothing new, but we're also getting 1 day to pass, and we're also getting $85 lifetime activation fees. That in itself makes up for a lot. Okay, so I really like the $85 activation fees. I actually just activated 2 accounts today. What I'm probably going to do over the weekend is go sign up, and I'm going to get 10 more accounts. Right now, I've only got 9 funded accounts. I'm looking to aggressively push that and take it to 20 before the year's end. And a sale like this is something that really entices me, right? I typically never buy any Apex accounts when it's at 71%. 80% is my sweet spot. 90% is a no-brainer. But the no-brainer here is that $85 lifetime activation fee. That link is down in the description box below. See all of you guys on the next one.